Steve, an ominous warning coming from Tencent. What exactly are they saying?
Yeah, of course, their guidance and anything they had to say on this regulatory crackdown was going to take precedence really over the results. We knew there was going to be a bit suppressed, and they were. And I'll get to the numbers in just a second, but I want to get to the guidance coming from Martin Lau, the CEO or the president of Tencent, because in the past results since this crackdown began and as they navigated the antitrust warnings and also the crackdowns on gaming, the crackdowns on educational tech, Martin Lau always talked about compliance is our lifeblood, right? They wanted to get ahead of anything. But here he's doing a more longer-term warning. He's saying we should expect, well, in the near future, he says, more regulations should be coming. This should be expected because the regulation has been quite loose over an industry like the internet, considering its size and the importance. And that's been a main point that we've been talking about for several months, quite a few months now, since the regulatory crackdown began last autumn against Alibaba. And that is, regulators are playing regulatory catch-up because that lax regulatory framework among many sectors that these companies like Alibaba and Tencent have gone into, allowed their largesse. Now, the results are a result of this crackdown in the second quarter. Slowest pace of quarterly revenue growth since early 2019. Gaming, one of their bread and butter industries, sectors, is under pressure. Revenue there decelerated. Educational technology, the crackdown on online tutoring and the like. Tencent backs a couple of big companies, including VIP Kid. That industry is being dismantled, nationalized, some would say, and big revenue generator from advertising spending. And that's going to have a spillover effect across all companies, all big platform companies. If educational tech providers are not spending on advertising, that's not going to go into the pockets of the big platforms, obviously. Net income, well, sales rose 20%. That was in line with expectations. But again, the slowest pace since early 2019. Net income did beat expectations, 42.6 billion yuan. The estimate was 30.8 billion, but it's not so optimistic because largely 20 billion of that gain, more than 20 billion yuan, was on investments globally. And again, WeChat is the big ecosystem. It's under pressure, too. WeChat suspended new user registrations last month. They have been criticized for walling off other consumers who are maybe use Alibaba's services from its services. And that is a key component of the antitrust crackdown in China.